What's up guys, and welcome back to another video. It's been a while, but I just wanted to get on here and let you guys know I'm back at home. As you guys can see, home sweet home, and back trading again, back working finally. But as the title of the video suggests, I have a new trading plan, so that's what I'm going to go over in today's video. Alrighty, are you guys ready? Trading plan by no days off. This is my new trading plan. If you guys want, I'm going to upload my old trading plan as well. Strategy, whatever plan. This might be a bit of a long one, so strap yourselves in. Okay, my tea's getting cold, shucks. Anyways guys, let's get straight into this. So the asset we're trading on is the S&P 500. Yes, ES1 exclamation mark. Not really. And we'll be trading it in the New York session, and the hours we're trading is 30 minutes into New York session pre-market until Asia session opens. Our risk will be 2% of our trade, 2% of our capital per trade, and the plan is to trade for 1 month on a demo account and then go into a $10,000 prop firm challenge for $60 a pop. It's paper before paper, okay? Paper trading before paper, if you know what I mean. So we start off by drawing on our charts. Mark out session times, okay? Mark out the sessions. Mark our London session, 8 to 2 p.m. Oh, this is my local times in South Africa, by the way. I prefer to look at the charts here in my times just because I like to do it like that. London, 8 a.m. to 2 p.m. New York pre-session starts at 1:30, so 1:30 to 1 a.m. and then Asia sessions 1 a.m. to 8 a.m. So mark out the sessions as well as higher time frame key levels of liquidity. On the daily, the higher time frame means the daily 4-hour and the 1-hour time frames. So mark out the previous day's high and low. Mark out London sessions, highs and low. Mark out equal highs and lows. Mark out high confluence highs and lows. And mark out news highs and lows. Forexfactory.com. Also, no trading on high impact news. Okay. I haven't written the rules here. It's kind of unfinished, but we'll get to that. Bias. After we're drawing, we establish a bias. We have an idea of where you think price to go. Okay. So use the higher time frame trends and liquidity levels to predict how price will react in New York session. Have a rough idea of where you want price to go, but don't focus too much on the daily bias. Trade reactively. Base it on how price moves on the higher time frame trends, levels and confluences. Don't simply predict long or short based on a daily bias. You can trade without or against your daily bias if it's invalid or low confluence. Everything depends on how the market moves, what price is doing, not your made up daily bias. Alrighty, once we have our drawing and our bias established, what do you guys think is next? Entry signals. We want to long or short based on how price moves off of the higher time frame liquidity levels and session highs and lows in relation to the daily trend, where price may go for the day, and your daily bias. Remember, this is not gold. Okay, so once you've drawn your higher time frame areas of liquidity, then you want to look for those to be interacted with for an entry signal. So if a higher time frame high or session high, daily equal key levels is swept, if a higher time frame high is swept, then look for shorts. If a low is taken out, similarly, look for longs. If a high is taken out but continues strong in an uptrend or shows bullish signs, wait for the broken high to be retested and then look for longs. Likewise, if a low is broken but the market still shows strong bearish control, wait for price to retest the low and then look for an opportunity to short. Now we have to confirm our entry. So we have a higher confluence trade, entry confirmation. Once there's been an entry signal, wait for confirmation on the lower time frames. This is the 5 minutes. Once an entry setup has presented itself, we want to look for smart money confluences on the 5 minute time frame and then a break of structure to solidify our trade thesis. After a signal, we look for a 5-minute break of structure, a 5-minute fair value gap, inverse fair value gap, order block or breaker block. I'm not gonna lie, guys, I only use fair value gaps and inverse fair value gaps. I used to have more like equilibrium, etc. These are my 5-minute confluences. Let's put them in gold. I wonder if you can. Okay, you can't do that. Put them in bold, put them in gold. And then a break of structure. The break of structure above the high or below the low that formed the 5-minute confluence, as well as the most recent high or low. Okay, formed. That's a key word in the sentence, and I'll get to that afterwards, after the whole trading plan. Entry, for example, the entry signal shows we have a bullish bias, so we wait for a 5-minute fair value gap to be filled and then wait for the most recent high to be closed above. Actually not. We wait for the high relative to the FVG to be closed above. Okay, now we confirmed, and what's next? We can enter. Now we're managing position. When entering a position, a stop loss with 2% risk is compulsory. 2% of the account, that is. This stop loss should be factored into the lot size when entering along with risk and account size. This can be done using position size calculators or ChatGPT. The stop loss should be placed below a low above a high that, if reached, should invalidate our trade thesis. For example, if price hits this level, my entry was incorrect, so the trade is invalid. Take profits should also be set. This can be done by opening multiple orders of different sizes and then setting limit take profits for partials, or by manually closing partial profits when certain levels are hit. Okay, comment if you don't understand that one. Once take profit 1 is hit, take out 50% of our trade profits and move stop loss to break even to secure profits. If take profit is 2 is hit, then take out 25% of the trade, etc., etc. for more take profits. Trail stop loss if necessary. So as you're going into profit, then you move your stop loss slowly into profit. Continue doing this until stop loss is hit or New York session comes to a close. Never move your stop loss into more risk once in a trade. And the only valid reasons for exiting a trade are if a stop loss is hit, if the session is reaching an end, or if there's high impact news in the next 30 minutes to an hour, or of course if you hit take profit and all of your profits are taken out, which usually won't happen. Okay, next we have journaling. So once the trade's complete, the trade's not complete. We still have to journal the trade. Okay, once your position is closed, journal on Google Sheets, Google Docs, etc., whatever you want. Note, was it a short, a long? Put the date there also. Note the date, was it a short or a long? Your profits, your bias, your entry signals, your entry confirmation, your position management, and your thought process, as well as did you follow the trading plan. Rate the trades from 1 to 10. For example, how was your bias out of 10? How good was your bias out of 10? How good did you enter out of 10? How good was the entry signal out of 10? The confirmation out of 10, how good was it? How well did you management? And overall, how was the trade? Review your trade, write down your thought processes, bias, setup, confirmation, and manage them, as well as emotions if any were involved. Write those down. Fix these quick. And then rate them out of 10. Also, monthly, quarterly, or after 25 to 100 trades, note your overall profit and loss, average profit and loss per trade, your win rate, your average risk to reward ratio, any losing streaks, or any winning streaks. Okay. That was our new trading plan. I'm trading on the S&P 500 in the New York session. This is a big change. I used to trade gold on the London session, and before that I used to trade GBP JPY on the London session as well. I'll be trading for 1 month on paper money, so until the 8th of May. That's when I'll be starting a prop firm. As you guys can see, I'm going to be doing a $10,000 prop firm challenge for $60. Let me know if there's any cheaper rates with any reputable prop firms. But otherwise, guys, thanks for watching. Welcome back. It's been a while. There's going to be a new series coming out, back testing SMP if I can find software, and live paper trading. It's going to be called Paper Before Paper. So thanks, guys, for watching. Leave any comments if you have any questions or input or feedback. Thank you guys for watching, and I'll see you all in the next one. What's up, guys? Just on this trading strategy, I say after a signal, look for a 5-minute fair value gap, inverse fair value gap, and then a break of structure above the high or below the low that formed the 5-minute confluence. And I just wanted to show you guys what I mean by that. So say we have this what's it called, this fair value gap right over here. Okay, we retest into it. Now we're waiting for a break of structure. This doesn't work so well in this example, but as you guys can see, the closest low to this fair value gap is here, and the closest high to the fair value gap is here. So what we want to see is a candle close above this high after the fair value gap is filled. If we were looking for an inverse fair value gap, then we first want to wait for this fair value gap to be closed below, and then this low all the way down here, because it's the closest low to the fair value gap, and this is the closest high. Let me use a better example. Okay, this works. Okay, you guys see this fair value gap right over here. As you can see, price retests into the fair value gap, then it just messes around, retraces, consolidates, forms a low here, forms a low here, and then the candle closes below this low. So we have a fair value gap and a 5-minute break of structure. But that's wrong. That's not our entry confirmation. We want to enter on the closest low or high to our confluence, which is this fair value gap or the inverse fair value gap. So we don't want to enter short on this candle. We want to enter a short on the candle that's below these lows here. So on this candle down here. Okay. This is just for higher confluences for me, guys. Sure, we may enter a bit later, but it doesn't matter. Anyways, yeah, bye guys.